All right, everybody. So little change of personnel. Obviously, Brandon's out today, so it will be Mark and Mark again. I think Mark Minerini's going to ask ask the questions, and then he's going to, I guess, sit more co-pilot. Is that correct, Mark?
Yeah.
Making sure I'm understanding
Yeah,
what we're doing here.
I'll let you answer and I'll just give you support.
Okay.
So we're ready to roll here?
I
Let's see.
think we're ready to roll. Do we record? Hit record.
Yep. We're recording. Okay. So let's start off. Brock's asking about MNDY. Let's bring up MNDY. On 10/9, bought it 281.67 because at the time I was experiencing heavy traction and thought it was viable. Uh, is trying to break out here from a short base. Yep, I see that. Doesn't quite have the look to add, but was wondering if you thought the lack of volume was concerning. Thoughts on the buy and how it's acting. So 10/9 was over here. So original buy right here. And now following through here after a natural reaction.
Well, yeah, I mean, I would say, given what he said, is sort of the key context that he was getting really good traction. So he played it, was a little bit shorter. It wasn't optimal. Well, that's the time to play one that's a little less optimal. And you can see it has held up. So, and this is one I've had on the radar. It's got good fundamentals. It's one I'd like to get on board as well. I was not willing to kind of go in with that, shorter little pivot. But if you're going to play a short pivot, this is the way to do it. Mark, your thoughts there?
It was textbook. I mean, it's a textbook. If the market was like really ripping, like you handle stocks like this, and you're going to be making some nice profits, on these breakouts. It's just we have not seen, and I'm going to go back to that IBD 50. It's still in a base and hasn't broken out. And same thing with the MDY. They tried to break out, but they're just not following through until we get that area, hitting on the cylinders. We're still going to be in this tentative, space where the volatility is causing some problems here. But this is textbook. I think you're playing it perfect.
And I think he asked about the volume. I would say no, that does not, a lack of volume doesn't concern me. And to me, it would just suggest too, if average volume comes in, then price is going to move that much further.
Yeah, and plus, we haven't gotten to the end of the day. And then I also look at subsequent days. Maybe sometimes the first day you don't get the volume and then it comes through the next day or two. So don't panic right away. Tom's asking, I understand 89 to 99 RS stocks are best for swing trading. How low of RS would you say is acceptable for day trading or very short-term trading? Again, you can answer that, but I don't think, that he's missing the point here, but go ahead.
Well, yeah, one, I was going to start by saying, I don't think about it that way in terms of, well, day trading versus I'm looking at the right side of the base. So even if I'm going to play a lower RS name, I want to see a really constructive right side. Yeah, I favor the higher RS names. And so I'm not going in there thinking, well, because it's a low RS, this is a day trade or something like that. So yeah, I don't know, Mark. How do you think about that?
I would just, I would say that, one thing that I'm at least unique about, I know Mark doesn't really do a whole lot of short-term trading, but when I'm doing the really short-term trading, I'm simply just selling the same setups that would be for buying for swing or long-term investment sooner. I'm not like going to a 5-minute chart or a 1-minute chart. So day trading for me isn't any different. It just means I'm just selling sooner, but I'm still using the same setups because see those setups, I know how they're supposed to act. That's my specialty. So I just stay in that lane, and it's just a matter of am I getting the follow through? Right now, you're not getting the follow through, so you sell sooner. You nail the profits down at the very least. You de-risk and you take some off and you finance your stop and you just play it safer right now. But as far as day trading, I don't think the RS is going to have really anything to do with that. If you're day trading, that's now you can be day trading a 1 minute. I'm not the person to ask for that, so I don't do that. Not in that sense, at least.
I'll ask. There's one or two came via email, so make sure we cover those. And I think this is good to get Mark both our take on at least the first one. Donald saying you've gotten no traction yet and recently been on margin and are
Yeah,
still
of
heavily invested. Are you following your own advice?
course we're
Uh,
fine.
well, yeah, I was going to say, I think the first of all, the idea that we're not following our own advice is not only illogical, it's just silly and more accurately ridiculous.
Of course, we've had traction. We built
Right.
on traction, and we didn't get more traction, and then you see we just pulled back, and now we're not on margin.
The other point, though, I think that people mistake, or it seems, at least since we've doing the Minervini Select, that at least has demonstrated that people are confusing exposure with risk, or thinking that just because we have maybe a decent amount of exposure, that automatically means we're taking more risk. And
Absolutely.
if you look at some of the pivots specifically, and one of the reasons why we really, in my opinion, haven't been able to get, some of that get out the gate strongly is because we've been so tight on the risk. So even when we've had 100% invested, we might only be carrying, 2-3% to stops. So don't confuse the fact that, we're carrying a decent amount of exposure with the fact that we're just, throwing caution to the wind with regards to risk. It's exactly the opposite.
Yeah, I would say 99.99999% of the time you'll be misreading the way we're applying our strategy, or you won't understand it versus us not doing what we do. I've been doing this for 41 years. I can assure you that my plan is pretty well figured out.
Yeah. And then David had a quick question on VRNS, which, which I think is a good question, asking specific.
VRNS,
Yeah,
VRNS. Yeah,
yeah,
yeah.
VRNS,
Oh
Varonis.
yeah, that's right. Yes.
And he was saying, what do you think? Can it survive the volatility, or will it drop below the support price of 3 weeks ago? And he gave 56.60, which is already below. I don't know why he picked that price. And I would just respond by saying, I have no idea. And
Yeah,
I don't need to
I
know.
wish we had a crystal ball like that. I'd be a billionaire for sure.
Right. This stock, I would say this is where it needs to find support ideally. But this is precisely, why we use stops and risk management, because we don't know. We have no idea. And oftentimes even, we'll buy a name thinking this looks really great, and it doesn't work out. That's why we get right out.
But here's the really important point. Here's the really important point. Let's just say that every single stock that we get stopped out on turns around, and right as soon as we get stopped, goes back up and takes off and goes into new high ground, turns into a big winner. And we did it 20, 30, 40 times in a row, whatever the number is. That's not going to change anything. Like we're not gonna Monday morning quarterback, and the reason why, and this is the thing you have to guard against, that you have to realize that you can only manage risk in real time. Okay. You could look later on and see what happened and say, well, I should have done this, but that's all just Monday morning quarterbacking. In real time, you have to, when you get dealt a hand and the hand goes sour and you get no flop, you don't know you're gonna river a two. You can't base it on that. But that's what people will do. They'll look and say, well, that didn't work. Every stock I sold went back up. I'm not doing that anymore. And now, of course, then when they don't, then the stock goes lower. Or even worse, they go, I'm going to double up here. And they start loading up and buying, and you're not managing risk in real time. And eventually that could work. It could work for a while. But when it doesn't, you blow up. And if you don't lose all your money, what normally happens, either you blow up and take such a big loss that you can't recover from it, or you damage yourself to the point where you don't outperform the market. You get market returns or less. And what's the sense of doing it in the first place then? You might as well just stick the money in the S&P 500. So either way, so you have to manage risk in real time. We do not know that this stock is going to go lower after we sell it. It could be right at the bottom. We don't care. It doesn't matter, because we have a certain amount of money that we're willing to lose on the position, and that's all that we're concerned with. You have to stop being concerned of where it's gonna go, what it might do, and if it's gonna turn around. All that has to get out of your head.
I think that's it for the Skype questions, Mark. So
Okay, all right. So what do you think of the pullback by Inteva on 10/21? Let's bring it up. Teva with stop on 10/20 low. So pull back buy on 10/21 right here. And then a stop on the 10/20 low, which of course, wait, 10/20, 10/21/18. There is no 10/20.
I think he's referring to 21. Yeah, I think he's identified, look, that's a viable pullback buy. If I was going to buy this name,
Yeah.
that's where I'd be buying it right there. This one, if you can point out, Mark, we were buying this when the market was coming right off kind of the lows there on 814. This one to me just has not really, it didn't follow through and get going. We bought this even in the MSP.
I think we bought this over
Eight,
here, right? Yeah,
eight,
right
eight,
here.
right there. And I was
Yeah.
expecting this to just go
So far, yeah, it started off good, and then it right here it got in a
and
little
it
trouble, and
failed.
I was
Yeah.
like, okay, well, it has to, it has to, the rubber has to meet the road here. And since then, it's just sort of rebased, so it hasn't really fallen apart.
Yeah. I would argue, look, if you want to own the name, where he highlighted it is the spot to get on board.
Yeah, yep. Hold on one second. I just got a message. I got a text message this person. All right, let's see. What would you say that periods like this one that we're going through happen very often and is exactly what this game looks like, where everything seems to set up good, you get heavily invested, and then most of the positions fail? How many of these have you ever had consecutively before a good period really comes? Okay, that's a very fair question, and certainly if you're new, this can be very frustrating. Even if you're not new, it's frustrating. But yeah, but we understand that this is part of the business. Yeah, it is normal and it happens, and sometimes it happens for extended periods of time. I mean, I can't personally quantify it and say exactly, but it's happened many, many times. I've been doing this for over 40 years. So, I've seen a lot of market cycles. I've also seen periods where everything works beautifully for, months and months and months and months. And then you have multiple waves of that. And I've made millions of dollars in literally a few months. So, it's feast and famine sometimes. And then sometimes it's that middle, where and then the middle is the real problem. That's why I tell people this is the kind of environment you got to be most careful. Like if it just rolls over and everything gets killed and you're in a downtrend and nothing sets up, you go in cash and there's nothing to do. And if you're in an uptrend, everything's doing great, the breakouts are working, you're making money, you're going to have losses, but your gains are outweighing them. It's when you're in the back and forth whipsaw market, that's when you get the living hell kicked out of you. And that's where you've got to be smart enough to play small, to use progressive exposure, stay disciplined, and just wait and get through it and survive it. I mean, Mark, you've been doing this for 15 years, so you've seen a lot of those cycles too.
Yeah. And the only part of the question I would take issue with is the idea that, everything has failed. It hasn't. That's been what's been trickier. We've had enough merchandise even working to sort of keep you engaged. But if you've been too aggressive, it's been trickier to really ramp things up. So yeah, I would say it just kind of feels like more par for the course. But to Mark's point, this is where if you're staying in sync with your own trading, yeah, it might be frustrating, but to me, it feels more like you're just jockeying for position still. That's kind of the way I
Yeah.
felt. I'm still pretty long, yeah, obviously in the MSP account, but even in our larger account, we ramped a little slower and have done better because we just went with a little bit wider stops in some positions and
Yeah. I
have
want to
been in
point
a few
out
of the
though,
better
Mark,
names.
I do want to point out stopped versus failed. When Mark, we don't really refer to, like, even this, we wouldn't refer to this. We would refer to something like this where we bought here and then maybe we get knocked out over here as being stopped, but not a full-blown failure. Like this could still reset. It's still in an uptrend. It's not done anything massively wrong where, I know I got to walk away for this for months on end. It could still reset and set up. So yeah, it failed. The trade failed for you. You got stopped and you lost money. But that's getting stopped. And also it's the difference between pivot and base. So when you get a pivot failure or you get that leakage, which what I call, or you get stopped on, maybe you move your stop up to break even, it could still be fine and you just choked it off and you got too tight on it, or there was a little excess volatility and maybe your stop was tight. That's not a failure. And then there's a base failure where you literally break down, you break below the base, and it really looks ominous, and it's gonna take a lot longer to rebuild. So there's some graduation there as far as or maybe gray areas. Let's see. But this is totally normal. It's just, there's periods that happen like this and there's whipsaw and it sucks. But this is why everybody's not in market wizards and everybody's not a millionaire from trading, because this is what you got to deal with. And it goes on sometimes for extended periods of time, and it really, really pushes on your emotional Achilles heel. Let's see. Can you comment on TBBB and CBCO? What would a good setup look like for it to be viable? Well, I mean, we're going to look forward here. I mean, I just look for when there is a good setup, but let me see. Maybe there is. Yeah. So I don't know much about, I mean, I know about CBOE quite a bit, but I don't know this particular setup. I haven't been looking at this lately. It's obviously this is not enough for a power play. It's a smaller base. I mean, you could have bought it maybe on 1022. This isn't a stock I would buy from this kind of setup. I don't know what the RPR is on this, what our RPR, what a market surge relative strength is on it. I mean, I just bought Kroger, KR. That's a low RS, but that's a defensive name. It's a grocery. If we start to roll over here, it looks like money is rotating a little defensively. So you may get a little move out of there, maybe for a trade. So this could be similar. TBBB. I know I'm just jumping in here, but I'll let you.
No, it's
Yeah,
fine. That I would have said the same thing. So
yeah. I mean, yeah. This one also is a smaller base.
I mean, it's similar, more defensive food area.
Yeah, and I see that might be what we're looking, and that's not a good sign if we start seeing a lot of defensive stocks propping up and the growth rolling over. Like if the IBD 50 breaks down from here and the mid caps and the small caps can't hold up, and you start seeing defensive names, that's a bad sign. Yeah, I would get even more. I would get even more conservative. Let's see. All right, you can grade this one. Mark's asking, can you grade my buy on Rail? RAIL. Bought it today, broke above the high. Um, Mark, you see this one here?
Yep, I see it, and I
How
look.
come I didn't see this one?
Yeah, this is a textbook, lower priced. This is exactly where it should go. So if you bought this today, you bought it perfect.
Looks good. It looks good. It's up 300%. It's huge. This is a big power play here. As I'm scrolling back here, some might look at this as supply, but it's way back a lot of years, so that's not a problem. And this is an explosive move. You got your first double right here, and it only stayed sideways for like 4 days. I mean, some people buy these, and you just buy a pause. You could try that. I mean, another thing that I've experimented with at times where you get a stock that goes up 50% or so, gets a little pause. If you can get in at a really super tight stop and just take very little risk, you can, in the hopes that it becomes a power play and you get another 40-50% move before you even get the double. That's something I've experimented with, but I just almost never ever have done it. But I have seen that it is maybe an opportunity, when you get a really big move, 50-60% move. That's why I like to look at the stocks that are coming up on, we've got the screens where the new 70 relative strengths and the new 95s, look for that momentum. But I would play it just like you're playing it. I'd wait for the base and play it from there. Let's see. So moving on here because I see a whole bunch of questions from the same person. Gotta give some other people a chance here. Roberto, last week I had 70% exposure and 2% risk. This week I got hit on several of my positions: CR, HNI, ITRI, SPXC. I managed to move stops and make reductions, but ended with 15% exposure and 0.5% risk, losing 2% of my portfolio value. Kind of sounds like us. I feel like I got run over by a truck. Two questions. Should I have been quicker to exit? Now, now, do you think I should slow down to avoid sinking further? My AV average position is 7%. My turnover is 4 trades per week. I'm flat for the year. So it sounds similar to our experience
Yeah, I would say.
in the select portfolio.
Well, I would say too, look, 70% exposure and only 2% risk. You're doing a really good job managing the risk. So
Yeah.
that's a cost of doing business. As far as to the emotional point, I feel like I got run over by a truck. Well, I much prefer being more risk averse than, wanting to take more risk. But that's normal. And now the question becomes, look, should you, curtail risk even further? Well, sure, especially if you're not getting traction, or you wait to see, again, can can you get traction, with things coming the other way? And even to some of these setups, we had some things shake. Do we get some resets? Is there, any signs that things are kind of shifting back the other way? I would wait though until you can get either traction with the remaining positions you have or some new buys before ramping back up.
Yeah, once you're down, you want to come back slower, and just keep the risk really tight. Now, I want to tell you guys a quick little story here, and you'll appreciate it, and I'll come back to why I'm telling you this with my own comment for what you said. So I had, and I'm not going to mention any names, but one of my very first assistants that worked with me, I had a couple notable people who worked with me in the very beginning. Was came and stayed with my office for years and worked with me, and then moved and went on his own, and wasn't working directly for me anymore. And we hadn't talked for a little while, it was almost a year, I think, that we hadn't talked. And I got a phone call one day, and he was literally crying, like blubbering like a baby, and crying and saying, I screwed up, man. I didn't stay disciplined, and it's a disaster. I don't know what to do. And I'm like, oh, what's going on? I'm like he blew his whole account up. And he's like, yeah, I blew up. I blew up. And so finally I said, well, wow, you lost everything. He goes, no, I'm down 14%. And right there I said, okay, I trained you well. And back to this, where you said you feel like you got run over by a truck by being down 2%. That's great. That's fantastic. That's exactly what you should feel like. Don't wait to feel like you get run over by a truck when you're down 25%. Associate that pain to large losses, and even, your small losses will start to feel large, and you'll make them even smaller, and you'll really go from a low risk, standpoint on all your decisions. I feel the same way. I don't like to lose one penny. I don't like to lose any money at all. Anytime I lose, I feel like I got run over by a truck. I just don't want to lose anything. It's not realistic. I'm going to lose on trades, but I put that bar so high, and that makes me respect risk, and I don't open my nose up, and I don't get cocky, and I don't trade large when I'm not doing well. And going back to what Mark said, it's not risky. Oh, you guys have 120%. You're on margin. Yeah, but our stops are 2%. Or if we got stopped on everything, we're down 3%. That's not risk. That's not big risk. Yes, we have overnight risk. That's true. We do have overnight. We do have some, but that's impossible to avoid. We have to take some overnight risk. But our risk, we're managing that risk. And even though we have big positions, we're still coming in, into those positions with very, very low, with a very high, standard for the stops.
I could share similar stories. I'll do that on a later point. But to Mark's
Sure.
point, we would much prefer hearing people saying, "I feel like I got punched in the gut" when they're down 2 or 3%
Yes.
than the opposite.
And going back, I just see how our whole membership has really grown and matured, because we go back 10 years, people would these conversations would be saying, I'm down 50%, and I'm thinking of adding to my position here. Those are the questions we would get. And I was like, oh my God. And now it's different. Now the average, MPA member is like you. They're like, I'm down 5%. I blew up. It's a disaster. Great. Yeah, because it's not. You can get that back pretty quickly. But if you get complacent and you don't take that seriously, that you're going in the wrong direction, yes, it can go to 2 to 5 to 10 to 20, and it's a slippery slope. It's a slippery slope. So just respect risk. Don't be in a rush to revenge trade and get back quickly. Let's see here. Eric's asking, what has been your percent P&L performance 6 months since the start of the Minervini Select? Are you doing anything different? So, in your own trading, the Minervini Select, well, I'm not trading. The Minervini Select is not representative of my own trading with tens of millions of dollars. No, it's not. And it's not representative of Mark and Brandon's either. But it is representative of identically on how we're going to enter positions. In the Minervini Select, we've made a decision not to short-term trade. Again, if it's up 10% and we're going to de-risk, if the thing pops today, it's up 10%, we want to de-risk. Yes, we might kick out part of it and de-risk it. Maybe we even would take a short-term profit, but it's going to be an aberration. It's not gonna be the norm. I mean, almost every trade that we're doing is we're playing for a swing move. In my own personal trading, I'm not gonna just make a firm commitment to that. I'm in 2021, I traded like a madman. I was on 400% margin. Sometimes I had my entire account in one or two stocks fully margined, as the intraday margin of 4x. So we're not going to do that in this. And I would not advise that until you are really experienced and been doing this for a while and already maybe have doubled your money on a cash basis and you've gone through a couple cycles, and then from there you can start, maybe trading more aggressively like that. Let's see, George, I'm down around 1% on my last 20 or so trades. See, once again, great. There's a great management of the risk, obviously, and just under 2% year to date. I've got a 31% batting average gain 6.32, and average loss of 2.92. So see, this is very indicative. I know there's more to the question, but this is very indicative of uh, a well-managed portfolio that just is lacking the upside and the batting average because of the environment. Right, right. Look at these numbers, Mark. I mean, isn't that where, we just increased that batting average by 10% and that average gain by 2, and suddenly you're making a bunch of money, right?
Yeah, you go from break even to really profitable.
Yeah, I mean, so that is completely normal. What happens in a tough market is your average gain comes down, it gets compressed, and your batting average comes down. And usually that batting average, if you're doing this, in a textbook way that we would do it, that batting average would be anywhere between 25 and 35% when things aren't going well. And the average gain might be 4, 5, 6%. When it's going really well, your batting average can be as high as 60, 60, it could be even higher, but running, for a long period of time, it could be 60, 65%, but it'll average about 50, 50. That average gain will be up 8, 10, 12%, maybe even more, 15%. That loss, that's the key. That's the key. So see, you got it at 2.92. Now, that could be even a little more. That could be 4 or 5% in a good environment. But in a tough environment, you're keeping it nice and tight, and that's why you're surviving. Perfect. Now, when things start working, you open up your game. You start opening up your game, and you give the benefit of the doubt when things are working. In this kind of market, you don't give stocks the benefit of the doubt. So let me complete the question here. I've reviewed my trades and haven't done anything foolish. I'm trading about 1/3 positions, keeping losses tight, and only getting about 25 to 40% invested, as I'm not getting much traction. Am I handling this okay from a tactical perspective? And can you provide some feedback? All right, so Mark.
Yeah, I'd give you an A plus. I mean,
A
what you just described there is exactly how you manage the bad periods. And I know sometimes we
Yep.
use different analogies, playing cards or sports, but this is the sports analogy is you're not playing well and you go in at halftime and you're barely down. That's exactly where you want to be when you're not playing well. Because
Yeah. And
once the game starts to shift in your favor, you're going to take the lead easily.
if you have a strategy that uses progressive exposure and you're trading your largest when you're trading your best. Now that's the part that I don't know yet. I haven't seen that from you yet. So now, do you have a mechanism that's going to get you to trade aggressively when things are working? You're doing really well. You're trading conservatively when things are not working. But when things are working, that's where you have to get real aggressive. And that's what someone like myself, Mark, Brandon, guys like David Ryan, William O'Neill, Paul Tudor Jones, that's what we're very good at. We're very good at keep riding the brake, but slamming the pedal to the floor when things are going well and making a lot of money in a short period of time. And that opportunity will absolutely come. It'll come sometimes when you least expect it, and that's why you have to have discipline and stick with a strategy. Let's see. So could you please comment on these two buys? One is Shaq. Okay, so let's bring up Shaq, which I've been agonizing over. 1023, first quarter position above the high at 1022, and the second quarter position above the high of 1021, stop loss at 105, 4.4 loss. So let's just get those dates and take a look at where those dates are. We got 1023, which of course is right here. That's where we bought it and it didn't work out for us. And 1021, sorry, 1021 right here. I'm not sure I understand it. Always, well, hold on. Let me just make sure I'm reading this right. The high of 1022 and the second quarter percent above the high of 1021. Okay, so you, I guess, bought it on the same day and just parameted into it on that day.
Yeah, I would argue this is bought perfectly if I'm understanding where he was buying and
Yeah,
exactly the way we bought it.
yeah,
And this is a good example of what we've been talking about, and where if you've been really tight, this is what's been happening. We're giving it a little bit more room, or maybe position sizing a little bit smaller. Of course, hindsight's always 2020, but this has been a
yeah.
theme of the last few weeks. It looks like he put his stop maybe. You put just below the 50? No, sorry. You just look like you picked a percentage stop. But right now, that's still holding. So I would stick with the name, or maybe even now move it to yesterday's low because it looks like another shakeout. But I'd say, yeah, it's a good example of the tactics, good use of the tactics.
Yeah, so we're still sticking with the 10-2 purchase from over here on open positions, right? We still have that
Yeah.
open. Right. So again, in the select, we're being much more risk adverse. So we're getting whipped around. So, whipsaw market, the tight stops are going to hurt you, but they're going to give you smaller losses. If things start going wrong and you get hit by a bunch of stops in a row, which that's what's happening, we're not taking bigger losses. And that's why we're not taking a big overall loss. It could be painful when it doesn't go lower, and if it goes up with and then takes off without you, and you're saying, "Oh, I should have held." But again, in real time, you could, bullets are flying at you, and you could say, "Oh, well, I should have ran across and went and got the gun and shot back." Meanwhile, it's all in hindsight. But if the risk of getting killed, or having a big injury, you have to weigh that at the current moment. And it's not probably not the greatest analogy, but probably know where I'm going with this. So again, you're playing this perfect. There's nothing wrong whatsoever with the way you played that. Walmart 1022 bought full position. Yeah, I mean, I already know what that looks like, and it's
I
it's
think it
the
was right
same
where we
thing.
put it on breakout alert as well. So
Yeah,
that's
right. Yeah, 1022, perfect. I mean, it's breaking out. We put it on alert. And so, if you're buying stocks when we're putting them on breakout alert and buying them, certainly I'm not sure if you need my comments or Mark's comments on that, because we think it's a good bet there. Or we wouldn't be putting it on the platform. So Kevin says he bought MHK on 1021. A lot of buys on 1021, it seems like, or somewhere around that there. 1021 right here. With a tight stop, which hit on 1022, which of course is the next day on this gap. Can you grade my entry? I missed this in 1015 and thought the risk reward wasn't too out of whack with my buy. Mark,
I'm just reading the question. Did he bought 1021?
he bought on 1021 right
Yeah,
here.
it looks
160,
like,
163 as
yeah.
it was coming out right here.
Well, yeah, but the thing on my chart, it looks like it gapped higher, where you can't see that on the open.
Ah,
And so my critique of the buy would be if he chased the gap, I definitely don't like it in that regard. But even not that gap it's not too far above the pivot. And if things were going well, I'd say it's okay. But you didn't get a very good close. And was this going into earnings? That was the other thing I was checking. So if that gap down was earnings, this is one. No, it wasn't. So I'm not sure what that was. I would have just gotten right out, on that gap lower.
yeah, the question was a CLPT setting up as a pullback buy. This is one that I have on my on deck that I'm watching. And I would wait for it to go maybe to go inside here. It didn't get a really good close right here. It's a pretty decent sized pullback, so I'd want it to maybe go optimally. I'd like to see this go inside and then maybe go and start going from there and just get that to round out a little bit and get me the same type of thing that I would like to see if it was a longer base, and get some type of bottom fishing pivot setting up there. But otherwise, yeah, you're on the right track. Let's see. What do you think of GMED? GMED. GMED. Oh, hold on. That's GME. GMED.
There's a symbol I haven't heard in a while.
Yeah. Yeah, I don't know this one too much. Yeah, it's a base, and you got a little, pivot forming here. It looks in a good market. This, probably would entertain something like this, sight unseen, and and jump right on it if the market was rip roaring. But in this market, I don't know much about it, but I think your eye is very good.
Yeah, that's what I was gonna say. And looking at it, fundamentals look okay as well. So I would say if you're looking for a low risk entry, and like Mark was saying, in a better tape, the RS is a little low, RPR is a little lower, below 90, but yeah, it's not a bad eye though.
Okay. Do you see ERG as a potential candidate? For you, Mark?
This was one I want to say, Mark, you should show. I think we put this on, I want to say early in the year, if I'm not mistaken, or
I
late
see.
last year.
I think somewhere maybe over here because I see I have.
Even earlier. I think if you go to
Okay.
original buy point,
Yeah.
it's held up really well, obviously. Yeah, coming out of that base was I think where we were
Right
originally
here.
buying.
Right here. Right
Exactly.
here. Yeah. That
It's
base
just too
here.
short right now, I would argue. And it's hugging the 50 a little bit. It's not my favorite.
Yeah. I mean, it's a cheat area. So, if you're going to buy something like this is how you would do it from a cheat area. So, but yeah, it's not much of a base. I'll keep an eye on it. Mhm. My question on Monday, says Andrew, was whether PLTR is setting up for a power play, PLTR. And I'm a big fan of Palantir. I really like the CEO quite a bit, and I like what they're doing. And I think I feel like this stock is going higher. I've been wanting to buy this from all the way back here and just never got a setup. I don't know, Mark, what power play here? I mean, it's up.
I mean, it has doubled. Yeah, look, this in the stock, to Mark's point, it's not a secret. And you look all the way back to, post COVID, that 2020, it hasn't even made new highs. You could make the argument this is putting in one giant primary base, sort of. So I like it in that perspective. It's just too short right now. If we could get a better pivot here, look, it's held up really well. Like Mark's saying, it's in the AI area. They got fundamentals that look like they're coming in, and they have all the story and all that kind of stuff. They're just not an entry point yet. So he's got to be patient.
Yeah, I mean, this is high on deck for me. I'm waiting for a buy point. So if it sets up as a power play, I mean, you can make a case, I guess, here after what, maybe 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I guess you can make a case here with about 10 days, and bite the bullet here. I'd like to see a bigger base. Let's see. Franco, following up on last Monday's question on trading around positions, what kind of yearly return should I expect if I look for 4 to 5% average gains and 1%, 2% stops? Is this kind of trading you were doing in 2021? What percentage risk of total equity should you use for per trade? So I would use the same guidelines for equity of total equity, risk of total equity. I'm sorry. Well, in 2021, I was up over 300, 40%. So that can tell you what you can expect for returns if you're taking very large positions and you're turning it over. I mean, I can't tell you. It depends on what the market throws, offers you. All you can do is, play the setups, and when they're working, get aggressive, and the return comes out to whatever it is. But, I've had well over a dozen, maybe 15, maybe a little more than that, 16 or 17 triple digit years in a 41-year career. I've averaged, well over 50% over that time frame. And so the rewards are huge, and you can do it by having the short-term trading, swing trading, and even with longer term investing, but to me, that's the toughest road. The toughest road is to hold for the big moves. If you want to talk about frustrating, if you think it's frustrating getting stopped out with little stops, you should try going and having a stock that's up 100% and you hold it down 50 or 60 or give it all back, to try to go for, the next Amazon. There's where you're going to go through hundreds and hundreds and hundreds of stocks before you get maybe one that turns into a big winner. I talk about low batting average. So I think, the short-term trading, you'll do fine with that. Mark, I mean, your Brandon and your performance has been, also absolutely phenomenal over a 15-year period. But your average gains are definitely bigger than 4 to 5%, but your stops are actually not much larger than 2, right?
That's right. Well, yeah, I think the point Mark made that's really subtle but important is that idea of don't have a target. Take what the market's giving you. So there'll be
Yeah.
periods where you just feel like, again, I've used the sports analogy, but like I can't believe they keep throwing me these fastballs right down the middle. Well, am I not going to swing? And then
Right.
there are periods where you're like, there's nothing near the strike zone. Why would I swing? And so, yeah, you don't want to think about it. And if you're going to do anywhere close to, those type of numbers Mark was describing, it won't be done with the same amount of return every single day or week or month.
No.
Unless you're a really, really, really short-term trader. But even then, you're going to have environments where you make a lot of money and then environments where you don't do much.
I've gone a few years without making any money or being at a small loss. I've gone several years where it's really just been back and forth, back and forth. And then I've had periods where I went 4 or 5 years in a row and made 20, 30,000%. And did triple digit returns for multiple years in a row. So yeah, you got to just take what you get. But here's the thing. The shorter term you trade, okay, and this is sort of an argument for you could say, well, then how about day trading? Well, there is sort of I think a happy medium point, and I find it in the swing trading area. I think is where you really get the best of both worlds. Every stock goes up 10%. All right, within a given year, you're going to see every stock fluctuate 10%, and there's so many opportunities that you could turn it over a lot. This is something we go over at the Master Trader Program, a section we call Mind Blowing Math, and more than just this, but the concept of turnover is really important to understand an opportunity cost. If you could get a 50% gain, but if in that time you can get, 5 or 6, 10 to 20% gainers and say average 15% per trade, you're much better off, right? So the turnover is really the key. Smaller profits are fine as long as you can do it more often. That's why Walmart makes a ton of money because they're on 1-2% margins, but they turn it over so much. Meanwhile, you'll have another retailer that's very high margins with lower turnover, and they both can do well. Hold on one second. All right. Let's see here. Last Q&A, Mark said, and I'm not sure, I think you're talking about Mark Ritchie, but it should be go time for SG. Was Monday a good opportunity for a pullback buy? Let's bring up SG. And I think I said that. So, and what I meant by that is that, this is where it needs to get support. I mean, if it starts selling off from here, it becomes abnormal. And it doesn't mean it still can't work, but the volatility becomes too wide. And we're less likely to participate in it, and we're going to be much more careful because the train's just not coming in on schedule. So a pullback buy here, and let me just, as you can see, I drew in what I thought would happen. And so far it's textbook, right? Let's take this out, take a look. So far it's growing right into that. So now for it to grow into, what I was expecting, we need a couple more days maybe, and then we turn up from there. So I would say, yes, I would say that if this could stay tight here, particularly if the market keeps selling off, and then this turns up, and I'd love to see it on a day where the market is coming off the lows, and this is one of the first stocks to turn up. I would be, if we didn't have a position, probably taking some right here through this pivot above this 37.66. Mark, anything to add to that?
No, I would just say that, again, it looks textbook, but, the idea even of go time, I like the way he's thinking about it because, look, it's tightening up here. You had the little pullback buy. If you didn't own it, you could have started a position. And then I'd be looking, especially Mark's point about maybe the market comes off another day. This goes inside. If it then goes, that's that tennis ball action. When it does come out, you want to see it get into new high ground relatively quickly.
Yeah, I think we have someone relatively new here asking what is the Mini Select portfolio. It's a real money portfolio that we started with $100,000 not too long ago, I think last March. And we trade and we as soon as we make the trades, we post it. You can find it in the tab under open positions. So far, we've only been up a little bit and down a little bit, and we've been flat. But we're treading water and waiting for better opportunities. Let's see here. Please critique my trade. I bought Nvidia half position. Probably anytime you buy Nvidia always turns out good lately. 9.9, then bump to full position on 9.24. So 9.9. Let's go back to 9.9. So
It
we're
was 919.
I'm sorry. Is it 919? Okay, I don't know
That's what he
why.
said. Yeah.
I don't know why I saw that. 919, 919, right here. It was on a gap. I mean, you didn't have the information of the next couple days, but I love the 924. Then the pullback here, this is a perfect example of like it going back to the danger point. Like this is where it really, again, look at the lows. One, two, three, four lower lows. Like that's where I look for it to get that support. That's where it should get support. Comes right back to where that pullback buy was, and you got four lower lows, and bang, it comes right in on schedule. So far, everything's acting fine. I sold half on 10.7 and 10.14, so 10.7 is right here. Yeah, I mean, that was pretty quick, but if you're de-risking, that's fine. And then 10.14, which is right here. Yeah, I like the 10.14. That's like that first run, it got extended. But you see, 1, 2, 3, 4, you got like maybe 6 out of 8 days up, good number of good closes. Like you haven't even gone through a first pullback yet. So this is definitely a very, quick sell. Um, let's see, yesterday I bought back and used staggered stops. I don't like the buyback because now you're starting to, I think you're now I think you're chasing and you're getting worried it's going to take off. And now I think your emotions are getting to you. Yeah, every other play was made really, really nicely. Not the best pivot, but I feel strong enough as to add spot. Look, again, if you just, if you're stretching the rules, make sure you adjust, on your stop and keep a tighter stop because most likely this is going to be a lower probability outcome. I don't know, Mark, what do you think of all this?
Yeah, I mean, I think I talked about this, and I was just checking on our charting because I think it was 919 was when it went to TPRA. So it was sort of coincident there, and it was just a little shorter, and you were running into supply, and there was a price to pay for that because I think we talked about this on a prior one. That's right where it ran up into that other level, pulled back, and to Mark's point, if it didn't shake you out, it was sort of kind of what you would expect. That's when the 50 flattened out, and then it caught support. So, but yeah, right here, it's a no-fly zone.
Yeah, Donald's asking interesting question. Please explain why MM mentioned his 2021 call on the market. How does it relate to the current market or MSP's performance? The point that I was trying to make is that, and Mark, you can even talk to this point about into this morning's memo, where the people who don't, that Monday morning quarterbacking or not believing, that first loss. And then you start holding, and then it turns into a big decline and it's too late. We're applying that same strategy. What happened in when you got the diamond hands, talked about the diamond hands this morning. That's when, the stocks just kept going up, going up. So everybody's buying the pullback because it was working, problem with that, and that happened in the 1990s too. Everybody just kept buying the pullback. Then when we got the big first break in 2000, and that's what I called for a major bear market because you had these stocks down 50%, like Microsoft and all the previous winners, that every pullback for the last 5 years was a great buying opportunity. Everybody's loading up on them after they made these big moves, and you're going into a bear market. And then it was one of the worst debacles in market history, and everybody lost their money. Millions, tens of millions of accounts were blown up, and we've seen that happen over and over. And that happened with the diamond hands. I was getting ridiculed on Twitter, by these kids. So, they're probably 22 years old, 25 years old, been trading for a year or two. And meanwhile, they're up big on their positions, they're adding to them. And when the stock breaks, they're buying it, they're not afraid of it. And then, what happened? They're all gone. I don't hear anybody anymore. It's crickets ever since then because everybody blew up. They all blew up their accounts. And that's why I'm still here 41 years later. and consistent. That's why Mark is still here 15 years later, and from a very small investment, they're managing tens of millions of dollars. I started with a few $1,000s. That's longevity is the key, and longevity, and that's what the message that we're trying to, get forth here today and in this morning's memo is that all that comes from managing the risk in real time.
Yeah, I'll just add too, and because I watched that unfold, and listen, call me a little old fashioned, but anybody that's been doing anything professionally for longer than you've been alive, you should at least be willing to listen to. And the number of people on Twitter and things like that, just so everybody knows, the number of people on Twitter who've actually made any real money in the market is way less than you think. That's the first point I'd make. But any fool, as my dad used to tell me, any fool can make money. It's the pros who keep it.
Yeah.
And what differentiates guys like Mark and the people you want to learn from isn't the fact because people think taking losses is stupid. That's the craziest thing I've ever heard. So in a market where, yeah, maybe we're not making as much progress, it's extremely relevant. Why? Because taking losses is what keeps you in the business. Pros take losses. That's how it works. Everybody else winds up losing in the end.
Yeah. And in some of these big, these winning these turkeys in a strong wind, and these people who made a lot of money, Bitcoin millionaires, they're somebody's in the right place at the right time every day. Every day, every week someone wins lotto, and every week it's a different name. It's about consistency. This is something, I've been doing my entire adult life and consistently returning and outperforming, decade after decade after decade after decade. So that's what we're teaching you here. Um, let's see. But you can always point to someone who's in the right place at the right time. Uh, I'll give you some commentary on. So Goldman Sachs question, Dan saying, setting a pullback buy or too far above its base. Well, I added it to focus this morning. So obviously I have to think it's not too far above its base. I think it's a pull. I think it's a natural reaction. And a pull back to the top of the base. But with this market, I mean, if the market comes off, this could very easily undercut and shake out this low and maybe even come down to the 50-day, and it still wouldn't be broken apart, but it'd take longer. Maybe this comes off for a couple days. Just use a little whoops, boy, come on. Use a little imagination here, and maybe this comes down undercuts the 50 if the market were to get in a bit more trouble. And then that would take, a little longer, where you might have to set up and go through a larger basing and get more of sort of a base on top of a base, maybe a little cheat area, and it sets up where now it takes more time. But right now, if the market were to turn back up here and we're back to the races, this is probably, a good pullback buy. Let's see here. SOFI. Well, okay, so this is just an extended stock here, but I can see, maybe close to meeting the minimum criteria for a power play, but not low price, nothing that I would buy at this point. I mean, who knows? It could double from here, but it just, this is a no man's land. Mark is just going to tell you the same thing. Let's see. Someone is asking, hi, Mark, what is a leader and what makes a stock a leader? I have a problem with buying a stock, then being fully invested, then another stock I like breaks out. That I like to sell some stock to buy the new position, the stock sold, then blasts off. Any advice to avoid this? So you can't avoid it. See that, and again, Mark, again, that's the Monday morning quarterback, and I'm talking about. And I just see this as, so personally, I think Monday morning quarterbacking is like the number one thing, is the biggest problem with amateur traders becoming pros. It's just like, you with the market, you always get to see then like how the hand would have played out. Imagine you muck your hand, pre-flop, and you every time you get to see how the hand plays out to the river. It might start affecting your decisions if you keep seeing that every time you fold, you would have rivered, your set, or you would, it would have turned out good. If that happens enough times, you might start thinking about holding that hand. Uh-oh, I think I look like my system. Can you still hear me? Because it
I can still hear you, still see you,
look like
and
my
actually,
system paused.
I don't play a lot of cards. It's funny though, Mark brought that up because anytime I usually play in an annual charity event, and anytime I'm sitting with someone who does that kind of thing, I usually try and stay sitting next to them,
Hmm.
because it just tells me they're not trading, they're not playing on principles. You know, what little I know about poker is you fold on principle. Meaning, you make the decision, you live with it, you stick with it. And but to Mark's point, because the market, you get to see every tick and where the stocks go, and you're never going to trade perfectly. That's what you
You
have
always
to.
get to see the next card in the market.
Exactly.
You
And
see
that
you know what would have happened, and that it doesn't matter. It doesn't matter what would have happened. So,
the
but a
one the
leader, but let's answer the leader question. You
Yeah,
know,
that's what I was going to say. The one thing I would say I like to do in terms of leaders is just look through your watch list and what is showing the best tennis ball action. What's making new highs quickly, or even take names on open position. I'll give you an example from Marla. CORZ, is a name, and I own the name. But looking at it even yesterday, and in a not so good day in the market, this was pressing on highs. While the market's this is trying to stubbornly, go against the wind. This looks like a leader. Quick tennis ball action is a 3-day pullback, one day right to new highs. That has a leader look to me.
I mean, and so leadership can be measured on a number of levels. First of all, relative strength, and our RPR rank or the market surge relative strength rank, which are very similar, are going to show you right away whether the stock's been leading the market or not. So the ones that are in the top 10% are going to be, usually your true strong market leaders. Your next 10% going to be sort of, your weaker secondary, and then after that you're in laggard territory. So that's one thing. The other thing is to measure against the market, the relative performance against the overall market, not just individual stocks, but so in a bear market, if the stocks that are holding up the best, the ones that are going into new high ground first, now you've got a really great reference point. That's why corrections are wonderful to find where the leadership is, bear markets in particular, because now you can see that contrast between the what the market's doing and what some individual stock. Stock market's down 30%. It's in a major bear market, and you've got a stock sitting near all-time highs in a base. That's going to get my attention. That's a market leader. But the quick assessment is the relative strength. Looking at the relative strength. You want to stick with stocks that are in the upper top 10% of RS. Let's see. So MNDY, can you walk us through basis natural reactions? It doesn't really have much of a base. That was the problem. It was trying to set up here, then fell apart. We got the Hardaway crossover. I mean, it didn't really set up until right here. And I think our previous member has, identified it and played it perfect right here. And now you've got a natural reaction, and here's your secondary point to add. And that's really all she wrote with that one. Let's see.
Close to time here as well, Mark. So I don't know if you want to go 12, do a few more minutes or.
Okay, yeah, just a couple. We'll do a couple more here. Let's see. Okay, so okay, how did you have traction when you're down and the S&P is up substantially? I know you had tight stops. So the S&P being up or down has nothing to do with our traction. That's like saying, how did your car have traction go around the turn when the car on turn 14 was sliding off the track? What does the car on turn 14 have to do with my car on turn 1? So that's not traction is whether we're profitable and whether we're seeing stocks acting normal, breaking out of bases and acting normal, and we're moving forward. We're getting some either traction in actual profits, or at the very least, things are acting normal and we're seeing more stock set up. We're seeing a healthy environment that is getting healthier. But we had traction. We didn't get tons of traction. We saw, and again, this is the difference, like I say all the time, between an amateur and I'm not sure why you had to say, yeah, I'm not stupid, because I didn't call you stupid and nobody's assuming that you're stupid. So not sure why you did that with an explanation point. But we don't think any of our members are stupid. There's no such, there's no such thing as a stupid question either. I mean, there's just we can be ignorant to certain facts here, and I'm still learning every day. So I'm stupid when it comes down to being a master at anything. I'm learning all the time. But the fact is that, and I'll tell you the difference between, I'll give you something more valuable, and that is that the difference between the pros and the amateurs, someone like Mark Ritchie and Brandon, they're going to move very quickly. Like they know what they need to see. And so traction to someone who's just starting this, it's going to be probably late. You know, they're going to wait until it's so obvious. And now you're actually maybe chasing stocks or late to the game. We're pretty quick. We know what we need to see. And we don't need ton. And now sometimes, let's just say, we did get some track. We're up 5% maybe in the portfolio, but now there's a bunch of, the focus list isn't very plentiful and it's thin. Well, then we're not going to be able to get that aggressive and add new names because the merchandise isn't there. There's other times where, and I think this is, Mark, you could correct me if I'm wrong, if you feel differently, but this time it seemed like we didn't get a whole lot of profit, although at one time I think we're up 3.5% or so, and that was enough to start, moving more invested. But the list was gigantic. And there's just a zillion ideas and everything breaking out. We don't know that they're going to fail, but we know there's a lot of ideas, and that's a sign of health. So that had also had a impact. And we're not perfect, and we don't have a crystal ball. We're just mere mortals managing risk, placing our buys on breakouts, and managing, and setting our stops. That's the bottom line. I don't know, Mark, do you have anything?
I mean, yeah, you answered it about as well as you could. The other thing, though, is the idea of, when the list is large, that's when the potential opportunity is large. Now, it doesn't mean you just throw caution to the wind, but we didn't do that. I would take, the prior 3 or 4 weeks, I'd handle it that way 10 times out of 10, 100 times out of 100. And if you do that correctly, after 100 tries like that, you'll be way ahead.
Yeah, and we didn't start a model portfolio where we literally within a second or two of after we make a move in the portfolio, we tell you exactly what we did and you see the equity on a daily basis. We didn't do that to pull the wool over your eyes. It's just the opposite. It's even more transparency. And so, this thing of like, oh, are you doing the strategy? Are you doing something different? Like, I'm not sure how we could be sneaky when we're showing you what we're doing. Like, I really kind of, I shouldn't say resent, but I just don't understand that comment. These kind of comments, like, are you guys doing what you practice? Yes, we are. Yes, we are. It's kind of insulting after 41 years of doing this. I do this. I've been doing the same thing for 3 decades. Nothing has changed. Nothing has changed, and it's not going to change. Right? It's just your understanding of it, your expertise is what has to develop, not mine. Okay. Let's see here. Let's go one more. The market is so tricky. One can progress only when they trade like Minervini traded in 2021. I think that's a very correct assessment right now, but it also is in hindsight. And the question is, in 2021, I made that decision early on, and it turned out to be clairvoyant, but it could also turn out to be wrong, and it could have got whipped around. I think you're right. I think trading the shorter term, and we already said this a number of weeks ago that at the very least, de-risking here would be the strategy right now, if not outright short-term trading, until you start to see that the trades are working on a longer-term basis. And that is literally just standard operating procedure. You should be trading like I traded in 2021 all the time until the market tells you you should be trading differently, at the very least of de-risking on half of the position. So, when we get it, and most of the time, even in open positions, you'll see I sell, and it's not a real portfolio, but I'm trying to communicate to you the de-risking nature. When we hit double-digit profits, 10, 12% or so, we cut it in half. It's sort of like just standard operating procedure. Now, you don't have to do that, but it works. It does work. It's a good middle of the road, lower risk, safer way to play it. And now when you start, when things start really working and you've built up some profits, okay, you want to shoot for the moon, fine, fine, but now you're not risking principal. With that, I do have to go. I hope this has been helpful with you guys. And Brandon would be here, but his one of his children got sick last night, so it's a very good reason why he's not here. So we want to wish him well, and everything I think is okay though. He did spend the night in the emergency room. So he'll be back, should be back next week. I'll be back on Monday, of course. I guess that's about it, right, Mark?
Yeah, just monitor the platform and we'll keep some dry powder here. I still think in a few weeks we might be right back to the buy side here.
We could be. We
If
could
some of
be.
this volatility calms down. So yeah, don't get too discouraged. This is normal.
Yeah, but with that, you also have to be prepared that things may fall apart, and you may end up even a little bit deeper in the hole because you tried a few more positions and they faked you out too. But you just have to stick with the discipline, and the longer it goes where the trades don't work, the more you're going to get closer to a period where they're going to work like a charm, because that's the nature of it. The nature of it is that as it weeds people out and weeds the amateurs out and weeds the undisciplined out, it creates a great opportunity. Like I always say, while you're doing nothing and while you're managing the risk, the less disciplined, the lesser skilled are laying the groundwork for your success. They're literally paving the road that you're going to be speeding on. And you have to be smart enough to understand that and to be patient and let them be undisciplined. Let them, it's like playing poker. Let them chase the pots and play the shitty hands while you wait and wait and wait. And you lost with aces 4 times in a row, and some dummy who shot for the moon and played a pair of twos and flopped a two. That can't continue. That can't continue. The odds are against it, right? You have the odds. So you play the odds, but does it mean because you have the odds that you're going to win every hand? No. It's a game of probabilities. It's amazing. I tracked the roulette wheel one time and it went like 20 something times in a row, almost 30 times in a row on one color, red. Now it's a 50-50 law of average, but that's how far off it can go. And theoretically, a roulette wheel could go on red for almost, not infinity, but as long as you are watching. Theoretically, it doesn't mean it's an independent odds. It doesn't mean because it goes on red, it has to go on black, right? But the law of averages, okay? And the same thing with the market. Same thing with the market. Just the discipline, being patient, and, that same question. How I get this question all the time on Twitter. How long do you wait? Things aren't working. How long do you wait? The answer is as long as it takes. Let the market be the train. You're the caboose, and just stick with the discipline. I assure you, you'll come out on the right side. All right, so we'll talk to you guys soon. Monitor the platform. Looking a little bit dicey here, so we're being a little careful right now for the next day or so. But let's see how things shape up, and we'll post our comments. All right, talk to you guys later. Thanks, Mark.
Yep. Take care, guys.
Bye.